Okay, pre-stream microphone check here. Let's see if everybody can hear me okay. And we'll get started here in a little under 2 minutes, I believe. But let me know if you can hear me in the various chats going on here, especially YouTube, because I was having some audio issues a little bit earlier during the test stream. So then let me know if you can hear me okay over there. Appreciate it. All right, let's get the music under control here. Fade this down a bit here. So we'll get that under control and we'll get this started in just a moment here. And this time when I'm nearing the end of the stream, I'll actually make sure that it's on when I say it's going to be on to cover for some of the silence as I read the chats. All right. So let's get this started over here. And in just a few seconds here, we're going to roll right into the charts. Let's go ahead and make sure I got the right chart up for this. Excellent. All right, let's get started. Hello and welcome to Landy's Crypto Corner. Today is October 13th, Friday the 13th of 2023. And we are going to start off by looking at Bitcoin today. And this is our normal Friday live stream, our Friday market analysis live stream. We're going to take a look at Bitcoin. We will then jump over to Dixie. We're going to take a look at gold, and then we're going to take a look at traditional markets. And if there is time left at the end of the stream, I might take some requests. So we'll see how the time works out here. But let's start off, of course, with Bitcoin today. If you watched yesterday's video, we will get yesterday's short video where there is a 12-hour setup for a possible reversal to the upside. We will evaluate that in just a moment, but let's recap where we are on the daily as well. We didn't actually talk about that yesterday, so we'll talk about it today. Bitcoin is still on the daily time frame, hovering right around this weekly support area on a close open basis at 26,750. And of course, it keeps hitting that downside area that we talked about at the lower first standard deviation. So it wicked in there on the first drive down, where we were kind of looking at this weekly support down to around 26.5, so 26,750 to 26.5. We saw another wick down there, a little bit higher at like 26,550. And Bitcoin may or may not get there today, but it wouldn't be out of the ordinary for another wick to be thrown down here. Now, if Bitcoin does drop the lows on a medium-term time frame below the daily and or the daily time frame, I would start looking over here at this close open high at around 26.2 to the lower second where the weekly momentum pivot is. We will again we'll go over that prior to rolling into this weekend's close, and we'll take a look at CME as well. But that's at $26,000. If that was to break down, I would be looking right back to the lows here around 25.5 to the this daily zone down here at 25.1 to 24.8. And, I know that there's a lot of people right now that are looking for a doom shot. I do think that if we did see this area retested and break down again, this daily support area, and specifically this wick low at 24,750 dropped, I do think that it would, with evaluating the way that price is kind of stepping its way down and up, and we get longer form consolidations between these larger spikes, and then things are going back and getting filled. I would venture to say that if this area broke down, the weekly below, of course, would get tagged around 20, 24.3 to 24.5, and then down here to 23.7 to 24K. But more importantly, I do think that things would head and probably try to hold up around this monthly at 23.3. And if that were to happen, we will revisit what the setup would look like, as that would be the really big downside target if this area is retested and falls apart at around that, 24.7 to 8 region. For right now, though, there's no reason to be looking down there. I've seen a lot of crypto Twitter talk and a lot of, YouTube videos that you guys link me to about these, different scenarios that might play out. And look, you can sit there and wait for a scenario to play out, or you can play what's right in front of you, right? And take the chart that's right in front of you, play the price action that's playing out in the charts for the time frames that you are going to be trading, right? Not some nebulous future target of, back to 15,000 or 12,000 or up to 45 or the highs again or 100,000, right? We want to take it one step at a time. Now, in looking at this pretty structured drawdown to that lower first standard deviation of the Bollinger Bands, I want to note that when reversing structure like this on a daily time frame and higher term time frames as well, this is actually what we want to see. We want to see, move off the lower second standard deviation after breaking through it, closing below it, getting aggressive expansion to the downside, retest back up around that upper first, and then back down to hold the lower first, reject off the basis, and then come back down and retest that lower second standard deviation post expansion. And then a move back to the upside, hold the basis to lower first area, and then a move through the upper second and third, retest of the upper second, and then back down to find support somewhere around the basis to lower first standard deviation. That is preferable when you're looking at these types of higher term time frame, longer term reversal setups. And when we look at this, we can actually see now that because the Bollinger Band's lower second standard deviation is above the weekly momentum pivot, and it's starting to get in and around this low side structure at $26,000, that area can still be bullishly retested from this Bollinger Band setup, and would not be abnormal to go and see this area tested or swung again, as long as we didn't start seeing the lower second standard deviation and that weekly momentum pivot at the weekly support breakdown. If that were to happen, then this picture changes. This would be continuation back to the lows here, most likely, and possibly lower. As it stands right now to the upside, if we do see Bitcoin start to close back above this weekly at 26,750, I would generally be looking up to the basis band around the monthly at 27.2, to the daily above at 27.5, and then above there the upper first here at 27, 750 to 800, above there 28K, where we can see all these closes have come up kind of right around that area at that weekly overhead. And then above there, the upper second at around 28.4 to the wick high here at 28.6, kind of bracketing that daily there at just about 28.5. And if we did start to see things closing back above here, I do think it'd be a pretty quick pop up to the next daily at 29K and the dailies above at 29.4 to 5, and maybe even all the way to the weekly. This has been consolidating down here for quite some time. So that if it did start to break out above that wick high at 28.6 and not experience a swing fail in those lower term timeframes, it's probably pretty likely to go and test immediately up further and probably take out any shorts that are above that wick, stop losses and liquidation, so on and so forth. So just keep that in mind. When looking at Stochastic momentum here on the one-day chart, we can see that it is currently pivoted at 28,100 or so. It's a little bit under 28,100, and it is approaching the bearish control zone. Now, you could take either a 40 read or you might see 38 reads. So it's right around that 38 read. So it's right at the edge of the bearish control zone to around 40. And then you can give the bullish control zone on the other side some room as well at around 60 to 62. Just a personal preference thing. We can see that if the daily did get all the way oversold, and this is important, I want to point this out, from its current stance here on this momentum chart, if we did see the oversold zone get tagged again, which Bitcoin on the daily has liked to come down and kind of play right at the edge of that oversold zone on the Stochh chart. That's currently coming in at 25,800. So, it wouldn't be abnormal to see a swing of that weekly momentum pivot. If we start seeing it close under there, of course, that's where the bigger picture starts to change at least a little bit. Now we can see that if Bitcoin were to cross back up, it's likely that we could then start looking at this as, this is a little bit of a bullish momentum reset, but it is getting divergence on the way down. So, that is, of course, if Bitcoin could put in a low, turn the Stochh. I'm not seeing that happening today, quite frankly, but you don't know. And I don't know either. We might see something pop off at, after traditional market close or something. We can see that on RSI for the daily as well, which I don't have on this chart. So I might as well go to this chart here. And we'll get into this one, but I just want to look at RSI on the daily here. There is, a bit of bearish divergence between these 2 points, but I'm not really that concerned about it. Quite frankly, there's bearish divergence between, this high back here at, about 30,200 or so and the current daily, but it's more of a continuation drive, just kind of points to what we're seeing right now. And it's already pretty well played out. If Bitcoin were going to play down further here, I would start targeting in and around the edge of the bearish control zone. And that's really if you start seeing the lows fail around 26,500. We can see that the bearish control zone is right there at around $26,000. So that's one of the main reasons why I'd be looking down there. And more than likely, we'd see a very nice drive of bullish divergence come off that area as well whenever a low was set. There is actually, let's go ahead and turn off the volume chart. We will get into this, the volume map chart in just a moment. But when looking at the prior low here, if it does push down just a tad bit more, it's like right on the razor's edge. It might throw a bull div here if a low is set here as well. So we'll just have to watch that. It's tough to tell, to be quite honest, and it's going to really depend on where today closes and then if a low is set, where this read actually comes in, because they're right on top of each other. It's currently at a 44.79, and the last low is put in at a 44.97. So there would be just a slight drive of hidden bullish divergence, higher lows on price action and lower lows on RSI if it were to put that in here. And that's coming from the 26K low there. So there is some potential on the other side of this. And the reason that I bring this up is because of the 12-hour setup. Now, when looking at the 12-hour setup here on RSI, we can see that it is right around the bearish control zone, and the prior low over here is right there at that $26,000 area. So this low on RSI is at $26,000. If Bitcoin can put in a low, of course, above there on the 12-hour chart, we would start to see hidden bullish divergence play out. Of course, that would be continuation to the upside because structure is still in an uptrend. Primarily, the larger structure is still in an uptrend. In this case, we are seeing a trend break to the downside here. So I would be aware of lower highs on the 12-hour chart. We had our uptrending structure here, had a little bit of a head and shoulders throwback to the top side. And then we had our uptrending structure break basically right here on this candle that could form this low. I don't really look at this as anything else other than a possible area for that hidden bullish divergence. When looking at the bands here, we can see that it is playing out one of my favorite setups that I've talked to you about over and over again now, where we see a move, a compression to expansion. In this case, the expansion starts to close down through the lower second standard deviation, pushing that lower third as well. Bounces up, reclaims. In this case, it's going sideways and the bands are still expanding past it. So the lower second standard deviation comes in, starts getting around those lows or lower, and then we see a back test of it. And that is a possible setup if it does start to run those lows down there, and or if it starts to regain the lower first standard deviation at around $27,000, then I'd favor a move back to somewhere around the wicks at first at 27,160, which I'm going to show you in the volume map is a very important area that we've talked about previously. There is this little low consolidation here that was put in that is kind of holding price down. But it'd really be those wicks right there to the close open structure here, which is right around that same area at 27,160 to 27,250 or so. And then it's right back to test in and around these highs, which is coming in at that basis band, which is at that daily area at 27,500. Above there, I would start to target the upper first again. And this would still be bearish, by the way, in terms of setup. If it did come all the way back to that upper first, just around that daily upper first as well. So they're kind of in line with each other at 27,800. If it does get above there, we're looking right back to the highs around 28,426. So and that does mean that on the other side of this, if we do see the low wicks dropped, of course, that would be below the lower second standard deviation as it stands right now. This will continue to expand to the downside. But if we were to see closures below here, then we start marking down, somewhere around $26,000 at this prior low after hitting this area over here at around 26,2 to 3. So that would be the big area to look at. And then, of course, the next big area would be the high side of the consolidation here at around that 25.8 area to the actual low at 25.1 to, well, in this case, 24.9. But I would give it room down to like 24.750 to 8, which is the equal lows area. So that is the setup on the 12-hour. And one of the main reasons that I pointed that out is when looking at Stoke, and I'll put this on a Stoke that is available to everyone, we can see that the Stoke momentum pivot was yesterday for the Bitcoin in 60 seconds video was at 26,900. It is currently pivoted at 26,800, and it is in the oversold zone. So to get out of the oversold zone, we can actually see that that number is going to be 27,120. Well, it's to turn it back up. This is a little bit of a wonky read. We'll see what this actually updates to, because it moved down into the oversold zone prior. This is still reading the prior close. So when this updates, it should be somewhere around the local highs. In fact, the oversold zone might even end up around where the current pivot is at that 26.8 to 26.9 region. So that does mean that if it was to get above there, then we would be looking at an initial cross back to the upside. And of course, closing above these wicks over here at around $26,900, $27,000, then we would be looking at a low being set here. And of course, that would then play out the hidden bullish divergence, and then we start taking those targets to the upside. Otherwise, it is a consolidation low. Trying to be set here, not too much more as it stands right now. Let's go ahead and drop down to the lower term timeframes and take a look at our volume map. As I lose my voice for a moment there, sorry about that. Let's go ahead and turn off the Bollinger Bands, because we are going to make the chart messy with a volume map in here with all of those big high volume candles that contributed to continuation after the swing fail pattern. In this case, remember, this volume map was built from the swing low to the swing tops that led to continuation, and then we're looking at the mean reversion back from the move up. So in this case, I wanted to point out some of the key areas that we just brought up with some of the momentum pivots and some of the band areas, and that's going to be the 27,160 to 200 area. If Bitcoin can reclaim this area here, and this is going to be at 26,800, right? If we do see this area reclaimed and closed above on some of those higher term timeframes, we can target somewhere around this low side structure, but the volume came in right on our already previously mapped volume area at 27,074 bucks. Of course, that is also the basis band area for that 12-hour and daily. Above there, we start looking at the 27 160 to 180. We see that right around this, in between these two high volume areas, we've got kind of the midpoint there at splitting the difference at like 27 145. So we saw this consolidation. It did swing this volume area at $27,000, and I think it stopped like right around 27,000. Yeah, it did. It did throw a wick a slight bit lower there at 26,963, basically $27,000. Higher load its way back up and retested overhead at that 27,300. If Bitcoin can regain this area, this is the area that I would be looking for it to play in, provided it doesn't swing the local highs at around, this wick low area that it's been retesting at that 26,950, 960 area. If it can push past there, then we're looking to 27 to 27.1, and then 27, 2 to 3 between this area here. Above there, it's likely to run back up to that 27.5 daily. There is a lot of room up there. So 27.5, 27.3 is the volume area, but 27.5 daily is just above it here, right around this area here. If it can push above there, we're playing in this zone between really about 27, you could take 27K to 27,800 and 28K up there. Above there, we're running the local high and possibly higher. So the volume map is working out very well. You can see that when things start to break down and swing different areas, it'll retest often. So it's retested down here. It did swing fail below this volume area, swing fail above it. So it's just kind of playing in between these two big high volume zones. And if it does start breaking down below those wicks, then we're looking down to the next big area. And of course, that's going to be 26, 2 to 3. And then below there, we've got 26, 1 to 26K basically. And, if it breaks out above, then we're looking to this high volume area. And looks fairly decent so far in terms of consolidation. This stair-step pattern is very structured. I like what I'm seeing for a potential reversal setup on that 12 hours, basically what I'm trying to tell you. But if it does drop those lows, then we are looking down to 26.2 to 26K or so. And that is, supported not only with all of the other analysis that we just covered, but also the volume map as well. Let's go ahead and take a look at where Dixie is. And we'll come back to Bitcoin and maybe look at some of the medium-term timeframes. I think the 12 hours is the one to watch right now, as it might be an early indication for that daily shifting. But as it stands, we can revisit some of the medium-term timeframes below the 12-hour a little bit later. Let's go look at Dixie, though. I need to see what Dixie's doing here, as I do think it got a really nice bounce. Let's go ahead and take a look. Yes, it did. It got a beautiful bounce. And as I had said, last time that we spoke on a live stream was Wednesday, and I had mentioned that unless we start seeing it break down, which it did break down from that 105.65, and then it just started playing around the lower first standard deviation, which was one of our main targets. And of course, that does tick up over time. Now we have seen that it got a nice bounce, and it's ran right back to the upper first standard deviation here, which is at 106.66. Now it does have a structure break because the prior low is at that 105.65. And if it starts to either equal high, low, or lower high, or throw another little bit of a higher high on divergence, then that's where we start looking at a bit of a daily structure shift. As it stands right now, this is, a nice bounce for Dixie. What does it look like in the context of momentum? Well, 106.55 will turn momentum back to the upside, and it's currently trading at 106.63. So we'll have to see where this ends the day. We can also see that there is a continuation drive of bullish divergence here. So a hidden bullish divergence, which is a lower low on our RSI read, higher low on price action from this low given back here. And this low, by the way, that it's calling out is this structure change low over here. It was a structure trend break. But then, it's still maintained the uptrend there, just bouncing off that basis band. So I still look at this as I need to see daily in-trend bearish divergence. It shook off this prior couple of drives of bearish divergence, no problem. I need to see more in-trend bearish divergence, whether it's built off of this structure over here or the current structure. And then we can start looking at this as possibly breaking down a little bit further. Now, the weekly is going to be the big one. So we do have the weekly close with Dixie today, and it's at pivot is at 107.03. So, unless it has like a really stellar, late session after market close, it's likely that we'll see this continue to get its full cross to the downside. So we'll have to see what that updates to when we speak again on Monday. What I will note is the weekly is well above its moving average here on RSI. Yes, it might get into territory where it can throw some bearish divergence, but as it stands right now, not looking like there's like really long-term bearish divergence, but it's not even in trend. It would be continuation drives, and there's no high put in just yet. So this is not painting a high just yet. So this would give me the bias that it can still swing all the way, still swing that upper second standard deviation on the weekly at 107.16, of course, up to that overhead resistance here at, basically 108. Could even swing that area. And that is the setup that is still available as the weekly is still expanding to the upside. The upper first is still holding this trend up on this weekly. And even if it were to crash all the way back down to that basis at somewhere around 103.5 or 101.5, I'm sorry, it's 103.5. I was right. To 104, still, it looks like a bit of a structure change on the weekly, at least with this downtrend break, and then possibly if it can higher low its way out, then we might have to watch out. Dixie could go run those local the highs back up there at 110 to 112 and maybe higher. As it stands right now, we'll have to see how this week closes. I do think that there's a bit more of a pullback in store. I think it just gotta, it's going to take some time, maybe running these local highs again and a little bit higher. But we'll see how this session closes, how Sunday opens, which it'll open on Sunday, but it'll be the Monday candle, as this would be the expected place to find resistance or bearish resistance at the upper first to that upper second. So, this is your first spot. If it does push past here, then we look to the upper second, which is right there at the local highs anyway at 107.23. So this could potentially reverse here, of course, if we see, Monday's candle close below 106.30. But if we do see, it start to push above 106.78 and possibly close back above there, then we have our highs as the target again at the upper second in that 107 area to 108 area overhead. So that is going to be Dixie. I do think that it's getting very close across multiple time frames below the weekly, that it's going to probably start trying for a wider pullback. I don't think it's ready to do that just yet, though. And it could just march on. There's always that possibility as well. Let's take a look at gold, because gold, I took some options on the lows for gold, and they absolutely exploded today. Now, they were already in pretty good profit, but even I was a little shocked at this particular move in the lower term timeframes when it really started to rocket to the upside. So gold, after reclaiming the basis in the lower term timeframes and specifically taking out this wick high at 1,885, which was the retest of this low, and you'll remember that we talked about this area as a retest zone. But once the lower term timeframes basically broke above this resistance at this low, it was game on, man. It shot right up to that 1893. And I'll actually show you in the lower term timeframes, because I was looking at the chart, like getting all kinds of all kinds of dings on my phone, and I was a little late getting up, but I'm glad that I got in on the low side. So I got in my options positions a little late down here on the higher low retest area of it was around that higher low retest coming into the options roll date, which is Friday. And this was it was a little stressful actually, because I didn't know if, this was before we had any news. I didn't know if we were going to go down further, and I was planning to pick up some call options down a little bit further. But I have now, I'm in my strike range, and I'm even above strike. So this is very nice, because strike was up here. I did want to call out, this is what happened on the lower term timeframes. So 1858 broke above, deviated, and then held it perfectly as support here. Got expansion and just rode that upper second, came down, and swung this low of this upward move, and then just rocket ship. And that was a 15-minute candle pause right at 1893 to 1895 or so on the wick high there, and then just rocket ship. Very, very, very nice price action here. And a little bit unexpected, I'll be honest. It did take me by surprise, as the expected area of resistance was going to be this 1893, because it right around that 1880 to 1893 at the upper second standard deviation here, after this pullback to find support on the upper first. It just blasted off, took out those highs, and then boom, next candle up. Very cool. I do think that this now closing up here, especially above the upper first, we had these as targets already to go run this lower high. I just was not expecting it to get there this quickly. It's not quite there yet. The open was at 1931, but closing above the upper first gives me the bias that it could test up to that upper second before a pullback, even maybe even higher, which would be really testing both of these high side structures around 1950 to 1960 up here by the upper second. If it can get up there and close up there, especially, not today, but you never know. I highly doubt that would happen today, but, maybe the Monday, Tuesday candle, something like that. If it gets continuation, that's going to be the logical area to start looking. If it does start closing back below the upper first here at around 1918 to 1920, then I'd look back to that 1895, 1893 area to the basis band, kind of before this breakout candle at around 1880 or so. Yeah, giving that up would probably not look as great, but this thing can mean revert all the way back to the lower first right now and still be in decent higher low territory at 1837. I don't think that's what's going on, though. The weekly is likely going to turn to the upside here. It's right around the weekly basis band. If it can close above, very nice. This was a reversal deviation structure. Beautiful higher low in the more macro. Obviously, it is still a downtrend here on the weekly, but we're looking at a possible trend shift here. And you can't fade that. 1880, it's going to close above there today. That's going to most likely, when this opens on Sunday, fully confirm that cross to the upside. Beautiful, beautiful move. And then we come back to it later, but it's starting to look like between the weekly and possibly 1931 is the pivot on the 2-week. Now, we don't have a 2-week candle closing this weekend, but this will be relevant to watch coming into next week, as there would be hidden bullish divergence here. Now, of course, there is also hidden bullish divergence. It's likely going to be confirmed. Unless it crashes between now and close today, which I highly doubt is going to happen, this is likely going to confirm a continuation drive to the upside in the more macro time frame. And there is a meme trend line here from the highs. And if this was to break out, well, we can start targeting this this bullish control zone up here on the weekly, and that's at $2,000. So, we had previously even talked about this, and on the 2-week, this would be, still within the realm of possibility. if it can turn the 2 week up. Of course, we wouldn't really know that until the end of the month. So the monthly close is going to be super important. The back half of October will be very important for gold. Obviously, the narrative that is being built around why gold is rallying. Look, it was the possibilities were on the charts to begin with. We had already previously called out these areas. It spiked into those areas, and it actually got front ran a little bit at that 1800 or 1805 is technically the area, but getting front ran at like 1810 to 1815, not out of the ordinary either. And then to have this pop back up with some higher term time frame bullish divergence as well. This is going to be the one to watch next week, as this weekly will confirm. We do not have a 3 week, but that is going to be closing next week. That's pivoted at 1994, so it's right there at the $2,000 area. And I do want to call out the band structure on the 3 week. Like, it didn't even hit the lower first, man. And this is an uptrending band structure. It favors running that high back at 2,000 to maybe 2,100 or more over time, but it does take a little bit more time. You can see that the 4 week is setting up this bigger range. 4 week is going to be a little bit, that's going to be the end of the month. But, the low side of the range there at, 1750, 1755. And the high side here where it's playing up near the upper first is in that 1952 area. So right around the lower highs on the daily that we've been talking about. If it can get above there, then it's, we're looking at $2,000 gold again, so I wouldn't fade the big accumulation structure here until we start seeing, specifically that support on the daily at 1804 start to break down. And then the monthly is just a giant range too. And this was a nice move off the lower second standard deviation to the upper second standard deviation and then back to the basis. If this puts in a monthly low, specifically, if we start seeing this close back above, the upper first standard deviation, and specifically from where it stands right now, if it does it in this month's candle, then the criteria wouldn't just be the upper first, but also the open here from August, which was 1965. That's where we would see a nice higher low structure being built on the monthly with targets up to the upper second. If it's a 3-candle structure, then it needs to get above the upper first only at around that 1952 or the daily lower high area. Above there, we're targeting the, 2K to 2100. So, and possibly higher up here to, that's 2100. So that is correct actually. And then on the downside, it has room all the way back to the lower first and even the lower second, because it's coming in above this low down here. And, that of course would be brutal, but in the macro, we're talking monthly. So in the macro, that's 1650. And then we've got 1750. The upper first is there at 1950 to 60. And then we've got the upper second there at $2,060. So very cool. Nice move. It took me by surprise today. But it's a bit because of the people who are late to the party buying it up after it's hitting some of those overhead resistance areas. So the low is set. People are a little late, come in and pump it right through those overhead resistance areas. Nice move. Let's go ahead and take a look at traditional markets, and then we'll look at chat here. So just following up with what we had spoken about. We don't need volume on this actually, so let me get rid of that. We had spoken about this on Wednesday, and coming up here to this open on Dow and finding resistance between there and the basis band, and it's literally just finding resistance right around the basis band and that high. So it has run it a few times. This high up here, but that would be the high wick of this bear candle here is more what I'm trying to say, around 33 900 or so. It's not out of the question that it could just continue to consolidate here, especially if it stays above 33,455. If If it does lose 33,455, then I'd be looking for a run back to the lower first at 32.3 or so, down to the actual lows again by the lower second. That would actually be my preferred setup, is to see it come all the way back to the lower second. I don't know if that would be something that's in the cards. Definitely not happening above any closures. I'm sorry, on any closures above 33,455. But if it does start to break out above this this bear wick high of the move down on this candle here, where it gapped up around that 33,400, then I would favor a move to the upper first, which is likely to come in at around 34,000. And above there, of course, we're looking to this gap down, which is basically 34,300 to around that 34,400 to 500 area. Above there, it's likely that this opens next week with the upper second standard deviation on the daily right at that gap area by this overhead resistance now. Pretty easy to read on this one. The weekly still headed down. Now, what I will say is there is the hidden bullish divergence that is going to populate here at close today, so keep an eye on that. That gives us room to the scale midline here, and that's at $34,000. So that's where, it starts to break out above this little candle that we just pointed out there at, 33,400. Then we're looking at more than likely a run to around that $34,000 to retest, and then slightly above there to that gap, which the SMA is currently above, but it's likely gonna the 12 SMA on the RSI is likely to be in that gap that we just talked about at around 34,3 to 4. So that is something to keep an eye on with Dow coming into next week. Let's look at SPY. I'm sorry. Let's look at NASDAQ. Sorry. NASDAQ actually ran all the way to the upper second standard deviation. And I've noted that, this doesn't change much. But looking at structure, it doesn't change much because it's still bearish below this high at 15,500 or so. But if, we have a bit of a structure change now. So we have the downtrending structure. We have a lower high. We've got a higher low to higher high. So we have a trend break, but we've already got the higher low baked in. So higher low, trend break right here at that 14,900, and then mean revert back to test it. And it can even test, anywhere down to that lower first, as long as it's above this last higher low. So in this case, we're looking at 14,900, where the basis band is coming in slightly under there, to that 14,700 and even 14,600 down here by the, it's actually 14,650 by the lower first. It can come right back there. It's trying to change structure on the daily. Now, of course, if it starts to close below this last wick low at around 14,500, then we're looking right back to the lows at the lower second, where it would still have a chance, as that is likely going to come in line with this low, and it does at around that 14,400 to 14,450 area. Looks good. The reversal setup is baking if it can complete. The big problem for NASDAQ right now on the daily specifically is this bearish continuation drive. But because it is a bearish continuation drive after a higher low and structure change, we're really just looking for this to come back and try to make another higher low. That's it. Most of what I would consider the first main targets of this bearish divergence have begun to play out, and it's just, playing back to the basis band area. And like I said, can still play down to that 14,600 to 700 area as part of that. When looking at the weekly already set a higher low, right? So, I mean, realistically, you want to see it reclaim this open over here, right? And that's going to be at 15,161. And but as it stands right now, this is not a higher low, but the low is already set, and this low already threw a drive of bullish divergence, and we've already seen that play out on the weekly. So, Dow looks a little bit stronger in terms of its setup for bullish divergence and like all this stuff, if it can push through. Whereas because NASDAQ had a much nicer bounce, sorry, I popped my knuckle right into the microphone there. Then I would be looking at this as, still kind of bearish neutral, wait for that, for the structure to build and possibly become an uptrending structure on that daily. As it stands right now, it is setting up for a bit of ranging activity between the upper second and the lower second, even if it does dip back down to the lows. The upper second's there at about 15,700 to 15,725, which is around that higher high up there. And then the lower second is coming in just right around the lower second here. And I suspect that it's going to tighten up after the close open of the weekly candle here. And this is coming in at 14,400 at the lower second. And it's still well above invalidation for much further downside. In this case, on the weekly, which is all the way down here at 14,200 or so. And in this case, momentum will shift on closes above 15,000. And, it's playing right around that area right now. So we want to see what next week looks like and the way that it closes, as it's likely going to show the etchings of an initial cross up on the close open. But we're going to need to see next week's Friday closure to confirm. And a little bit of a momentum shift coming off the lower first after a really big run up on the weekly, consecutive weeks, months in this case. You are going to get the meme trend line rejection people around that upper first. I'm not that concerned about it until I see the lows fail. So until we see, 14,400 fail, then this is nothing to me. In my personal opinion, it's just going to set up for a range, and then we look to see what happens later. As maybe it's transitioning to the mega bear market that everybody's seeking. The big areas to the upside have been tagged on the weekly here. We can see that a low is trying to be set here. We might see it. I'd prefer to see it close above 432 today, if it can do it. And that would also put it above. Oh, no, it did just close, so it didn't do it. I think it's going to call it a low coming into next week. It will. This is going to open and call this a low. It's not confirmed until this opens on Monday. But basically, I'd be looking for this to try to play out back to at least its local area if it can get back above 432. Daily, same kind of deal. We're looking at, in this case, we just had lower lows, and this is the trend break on the daily. So let's get the arrow over here so I can point at stuff. Main arrow, or the main area rather, to look for to the downside. Should the basis and this low be dropped at around 429.88, then I'd be looking to the lower first around 425 again. And we had previously spoken about this area as being one of the bigger areas to watch out for. If that area does not hold up, I'd be looking right back to the 420 lows and, go from there with some of the further downside targets should that area break. But, 410, 415, so on and so forth. But in this case, I'm looking for this to try and change structure on the daily, whether it's successful or not. What we will find out. But in this case, it mean reverted, like I had mentioned, right to that upper first standard deviation. And even if it had gotten to the upper second, it still doesn't do much. We need to see this build higher low structure. And right now it is in daily mean reversion. And, it's still good above 425. So that's going to basically be it for traditional markets. And we've covered Bitcoin, we covered Dixie, we covered gold, we covered traditional markets today. And I did it in under an hour. You're welcome. Let me pat myself on the back. All right, so let me go ahead, and this time when I put the music on, I'm actually going to make sure that people in the YouTube live stream can hear it, because everybody else could in the other streams, but everybody in YouTube was like, I don't know what he's talking about. There ain't no music going on. Let me throw on some music while I look at the various chats here and try to suss out what people are discussing and if there's any questions. All right, let's go ahead and going to go with heavy skies here. Let me know if that's too loud as well. As we take a look at the 15-minute chart to start with here, let's go ahead and take a look at the 30-second chart. I know some of you are big fans of this 30-second chart. Oh, it's a 30-second pump. Oh man, look at that, right back to the lower first. All right, let me look at over here. All right, you guys are wrapping up for the week. Cool. You guys have people staying at the prop shop post market? A few. Okay, there's a few staying over. They're looking to study. Cool. Well, you guys are probably going to be trapped because of traffic. Not if you leave now. You guys could leave now. Yeah, it's just the remote guys. Okay. So yeah, wrapping things up for the week. Yeah. Paperwork, right? Okay, cool. Let me go ahead and look over in, let's go ahead and look in YouTube. So I see there's quite a few people here hanging out, but only a very few talking at the moment. If you are hanging out and you'd like to chat, you can jump into the chat down below if you're subscribed to the channel. And it's just, a regular subscribe, not any kind of paid stuff. And you can jump in the chat if you have any questions. Let's say hi to people over here. We've got Roka, hello. Jedi, Ivan, No Name, Cheryl, hello. All right, so let's look here. We've got, okay. Ivan is working at, okay. You're going to be working, good. Congratulations. And Cheryl would like to look at oil. Yeah, we can look at oil. Oil's probably, if Qatar does what they claim they're going to do, then oil's probably going to have a really big run up. So let's go ahead and, now that the bulk of the analysis for what I typically do is done, let's go ahead and take a look at a few things that you guys want to check out. Let's look at oil. So gold had the beautiful pump. We had oil with, this is not what I want. I don't want the 30-second chart on oil actually. Oil looks like it's in higher low territory. It's got a breakout structure break. So we have the downtrend structure break here. If it closes in the next 1 hour and 40 minutes up here, basically above 87.20, then not only will it have a higher low, it'll also have the trend break all in one go off of the lower second standard deviation. And I say this every time, it came right back through the lower second and third. Well, not through the lower third, but through the lower second, closing in between the zone between the lower second and third, comes back up to the lower first, and then retests back down towards the lower second. So that's one of my favorite setups when using bands, because we had volatility expansion to a little bit of contraction, retest, and then it's mean reversion back to the basis. So around 88.13, it's likely to push up there. There is some overhead resistance right here, but if it blasts off through, then we're looking to around 90 to 91.50 at the upper first, and then right back to this local high at the upper second, around 94 to 95 bucks. That's going to be my take on oil. When looking at the weekly, this was just a pullback off of the upper second standard deviation. It did lose the upper first, of course, on that weekly, and it didn't quite reach the basis. Basis is going to continue to rise. It's 80 bucks now, but closing back above the upper first here would give me the bias that it's going to test the highs to the upper second there at the actual wick high. So it's somewhere around 95 bucks on the actual high. Could it push higher? Sure. We do have pretty good expansion here still on the Bollinger Bands. When looking at the Stoke, though, we can see 94.26 is the momentum pivot, but I do suspect if it does continue to push up, we'll see just a bullish reset on that, right? So we can see that there's not much. There's not much even in trend bearish divergence. There is the possibility for longer term bearish divergence, but that's not on the board yet. There's like way longer term bearish divergence, but it's not. That's continuation drives don't really matter. We're looking for in trend bearish divergence, and we're not seeing that. So no in trend bearish divergence. Bias is that it's going to go and retest somewhere around the highs, maybe higher. You want to see in trend bearish divergence. Daily, frickin', this is a higher low on RSI. It's your classic W pattern. It's all of those wonderful things, right? Including a momentum turn on the daily as well to the upside here, and it's going to close very strong. It's, momentum pivot at 82.45, and it's like $5 above there. So, this is looking like it wants some more. And obviously with Qatar, threatening to basically withhold oil supply to the world, as they are kind of the broker for Saudi Arabia as well. They act as a middleman for all of the countries that many of the Western nations have deals with, and then the countries that they don't, like your Irans, your Syrias, and so on and so forth. So, and many others. And if they say we're going to withhold oil, then everyone's going to feel the brunt of that, especially with the current administration in the United States draining the strategic oil reserves. That's it's a supply and demand issue. So I would be looking at maybe there could be like a crazy run like what we've seen in gold in just a few candles. It really remains to be seen. And because oil is a more supply and demand driven market, right? Yes, you can use paper to push it down, you can release reserves to push it down, but realistically, we're getting the look or the bias on the charts that it's going to retest those local highs and possibly higher. There's nothing that says that this is not going to try higher. In fact, if we look at the monthly says, like, screw you, we're going to go to the moon. 66.94 is the monthly. So, I mean, we already have the targets of, on the board from 2022, March of 2022 all the way up there at $130 are still available just from this structure alone. I mean, this was basically equal low structure on the monthly after a beautiful pump off the lows. This is a trend reversal structure classic, man. You had your double bottom area, or not, well, double bottom. You had your inverted head and shoulders, what some people would want to call it. That's not what this was. Obviously, the crash down because of the pandemic. Then a reversal of structure. We had a trend break over here, higher lows right on that trend break, getting equal lows now on that trend break area, and that's telling me that the highs are going to get tested again, to be quite honest. We're looking at like $98 to $100 at the upper first. Now it's really only got to beat out $95 to get that, and if it starts getting above there, it's back to the highs, 105, 110 to the upper second, and then right back to the 120, 130 area. And with the way that the chart looks off of this turn, when this was confirmed back in August, I was already telling you bullish divergence was already locked in. Regain of the lower first standard deviation, it was already telling you like this is ready to take off. And then of course the narratives always follow, right? The chart will tell you the news before the news knows what the hell's going on, right? And in this case, I'm looking further up on oil, and that is going to remain true as long as oil is above $80 to 81.69. Nice. Go figure, another 69, because markets are purely a meme. All right, so that's oil. Do you want me to look at AMD, or were you correcting something? I'm not really sure. Yeah, no problem, Cheryl. Oh, the guys over in the shop are joking about oil stuff. All right, yeah. Why don't you guys go finish up your testing? Those are not jokes that are appropriate for streams, sir and ma'am. Yeah. So, I mean, I'm not sure if this question is about AMD, but I can go look at AMD. AMD on the monthly has got lower highs, lower lows. And closes below 110 do not look good for AMD. The weekly, though, coming off the lower second and disagrees. Says above $100, looks good. Looking like it wants to play out a bullish continuation drive on the weekly. Daily says hold your horses. I want to test back to the downside a little bit. So I think this might stay a little range bound between 94, 95 and this 110 to the upside area. But it is trying to chop around. It's got a bit of a trend break now. Finally, it's got higher low structure on the way up, plus a trend break. It did swing the highs up here at that 111 area, 112 area, and it's mean reverting back as long as it's above the prior low here at 99 to $100, looking fine. Above that lower first as well. This is likely going to open and have it curl up around this low, so I'd say above $100 looks good. Below there, it's going to run the lows back to the lower second around 94, $95. More bullish would be staying above the basis band at about 102.50. So that'd be the big area that I'd be looking for structurally. But as long as it's above $100 at this last spike low, looking fine to try and shift that trend coming into the back half of the month, especially when looking at that weekly, trying to turn momentum, which I do believe it was successful. Yes, it is turning down in the daily. Yes, there is a continuation drive, but because it took out this last lower high on a close, we're looking for higher low structure to be maintained, or at minimum for the lows to hold. That would be the general bias based on that and the weekly, but the weekly could be the outlier here because below $100, this turns back down and the monthly continues to play out to the downside. And the monthly playing out to the downside really would be somewhere around the low wick back here at $90 to $94, which is the low side area that we're talking about on the daily, to $90. And then below there, it's a big drop, but it would be, we're looking somewhere around $75 to $80 at that lower first. Now that still would be the likely area to see it try to bottom things out here after a bigger consolidation, come down and then try to take out the lower high at some point later on at like 132, and then march on back to the actual highs up there in the 140, 150, 160 area at the top here. But as it stands right now, it's a sideways transitional market for AMD, and the quarterly though would start to give me, by the end of the year, if it starts painting a picture where it's closed above like 88, $90 by the end of this year, it is likely that monthly is actually the outlier, and this will chop around, change structure, and take out the lower high on the monthly and move on, to be quite honest. Like this would be, your rundown in 22, it broke the lows from 21. But in the macro sense, this is just a high level accumulation, reaccumulation. Could this be the distribution phase? That's only going to happen on closes below 50, 457. And quite frankly, that's the quarterly basis. And I highly doubt that we're going to see that breached unless, the crash of all crashes happens. This looks like it wants to, it's a reclaim. after the lower second, come back up. I've talked about this already today, but come back up, reject the upper first, come back to the basis to lower first area, and then higher low your way out. That's kind of, you know, this is the lower high to take out versus coming down and making lower lows and then immediately going up and taking out the higher high. No, you have to build structure, come down, you make the lower low, lower high, higher low, and then higher high. That's what the quarterly is telling me right now. I see, so AMD looks good. It might pull back a little bit more. It might not. So might even try for a higher low above the basis at that $90. But you know, as long as it's above $90, basically, looks good, especially on monthly closes. Daily, probably ready for a little bit wider pullback over the course of, you know, next week, early part of next week. And then the weekly, we have to just track towards the back half of the month here. You know, and we'll discuss that when we see market open on Monday during Macro Mondays. So, oh man, look at gold. Just trying to go for it, man. Very cool. My call option position is very thankful. I do think that wherever this puts in a high, though, it's going to be a pretty violent mean reversion on some of those lower term time frames. Sol is going to 2169. It's going to close at 2169. I haven't looked at Sol in a while. I've got Coinbase spot is right there at 2158, so I suspect that's probably perps. Might be trading above spot a little bit, which I would caution, but you know, they could be front running a nice structural hold of the 50%. We just looked at this on Wednesday, which is why the fib is still up. But after losing the 618, coming down to the 50% at $21 or so, you know, if it can hold this area, you know, there is a bit of accumulation over here. There's quite a few order blocks. You know, as long as it's above that spike low at $20.93 and still closing above the 50%, then, you know, I wouldn't be favoring a move down to $20 at the lower first and the 382. If it can, if it does start to close below there, I would be looking to around $20 at the 382 where the lower first on the daily is coming in. If it can start closing above, specifically now 2204, that would set a nice higher low, and that would also get it back above the 618 at 21.95 or $22 basically, and then I'd be targeting around the 786 by the upper first at 23 to 23.25 or so, possibly the 888 again at almost $24, and then the highs there at, you know, 24 to 25, so 24.50 to 25 basically. So it looks good. I like the structure. 23.62 would cross this back to the upside, still a ways away, but because it is an uptrending structure as it stands right now, this is more than likely going to bullishly reset momentum if it can put in a low. That is contingent on, as it stands right now, this putting in a low above 2204. So if it can do that, then it's likely that momentum will then begin to follow and start to turn back to the upside and get a nice bullish reset on momentum and possibly giving it room to run those highs and higher. When looking at the weekly, this is mean reversion on the weekly, playing in the big range. We've talked about this prior. Let's go ahead and get rid of the... oh yeah, that's right. We have our horizontals here. Yeah, it played down to that basis. If we can get above 22.33. Yeah, so those are the daily areas I think we were talking about. But this is a consolidation structure. We do have, you know, still weekly higher lows. The issue here is that closing like this on the weekly is going to put in a lower high. Now, granted, it's we had a nice higher high breakout. We did have the lower low, technically speaking, back here by the lower second. So this is more of a consolidation structure on the weekly. What you want to see is this hold the basis to the lower first area. If it starts losing 17.98, then it's back to $15 at the lower second, possibly lower, right, over time. But the picture that it is painting right now, as it is a little bit, it's actually a little bit stronger than most alts at this particular moment, especially when looking at the weekly, because this thing can literally come all the way down to 1321 and it does not break any kind of macro structure. But back above, back above rather, as my voice starts to fail, so I am gonna have to hop off here. Back above the upper first at around 24 to that high there at 25 bucks, basically above 25 bucks, which is 24.80 is the wick high here. Then I'd look back to running this local high at around 27 to 28 bucks, possibly up there to, you know, that 30 to 32 wick high area around the big breakdown candle over here. That was a rejection of this big breakdown candle open. And really what you want to see is what we're seeing now is come down, higher low. Yes, a little bit of a consolidation, lower high, start to really coil up and then take out that top side and that breakdown. But just be aware that anything below the lower first, basically at like, we'll call it 17 to 18 bucks. Yeah, anything below 17 to 18 bucks, or it starts to get in there, it starts to fail that wick low, we're looking at substantially lower prices on Sol. The weekly closing above $20.88. You know, this hasn't changed since we last spoke. Would start to look like a cross back to the upside. Beware, though, as we do have, you know, a conflict on the other side. Now, to be fair, there is bearish divergence that's likely going to lock in on this weekly close, but the easy part of that move has already played out, and the easy part of that move is the move from the upper first back to the basis band of the Bollinger Bands. So again, this still fits all the criteria of the daily, where, you know, we see that the lows, the low wick here, which is right at the 50% fib at 2093 drop. That's when we're starting to look at price getting marked down to 20 bucks and then possibly 18, and then possibly endangering that $17 area, possibly. So far looks fine. Little pop up, just trying to change structure on the daily. Let's see what it does when it opens, or, you know, over the weekend, and then of course into next week. I definitely watch the daily close. All right, my voice is starting to really break down here, so I think even the music. Did the music give up the ghost? No, the music's still on. I'm going to thank everybody that's been hanging out. So for those of you that are just coming in here towards the end of the stream, in the beginning of the stream, we covered Bitcoin and some of the higher term timeframes and some of the lower term timeframes. We also we jumped over to Dixie and then gold and then traditional markets. And then since then, we've just been talking about different coins and taking some requests here and there. So if you are interested, you can roll back to the beginning of the stream if you did miss that. For those of you that are here and have been here since the beginning, I want to thank you. I should have a Bitcoin in 60 seconds video up later today. Again, maybe a follow-up with that 12-hour setup, as you know, we kind of covered the daily today as well. See where that's at coming into the weekend. We'll see what the daily close is like today. For those of you guys that are over in the stream from the prop shop, thanks for hanging out. You didn't have to. I mean, I know you guys, it's a Friday, you can go home. For those of you in YouTube chats, and then for those that are not chatting but watching, I want to thank you. You have a wonderful weekend. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, and above all, with the things that are going on in the world, stay safe, no matter who you are, no matter where you are. And yeah, with all of that said, have a great weekend again, and Landy out.